What should your credit score be at when you're trying to buy real estate? And what do lenders require when loaning money for real estate? What's up guys, Robert here. I'm a real estate agent here in El Paso, Texas. In this video, I will be discussing what a lender would require from you as a buyer when you're trying to buy real estate. The information in this video will not only ensure that you qualify for a loan, but that you're getting the best rate and the best deal from the bank. Before we get into the video, if you guys are not already subscribed, make sure you hit that subscribe button, turn on that bell notification so that you guys get notified every single time that I post content on here. Also, don't forget to drop a like on this video. Guys, before you enter into any type of real estate transaction, there are a few requirements that a lender does require from you as a buyer before they will loan you any type of money. We are going to go ahead and discuss those requirements and also what lenders are looking for before they're actually going to loan you money for real estate. These are the basics and it all starts here.
Well, this is going to hurt like a mother.
The first thing that you're going to want to have is a good credit score. Ideally, you want to have a credit score of at least a 740 or higher. Having a high credit score will ensure that you get the best interest rate possible. Now, once you get past a 760 credit score, lenders will start to offer you lender credits. They may offer to pay some of your closing costs, better terms on the loan, and may offer you rebates. Now, this is because to a lender, a person with a higher credit score is considered low risk, meaning that there is less risk that you are going to default on the loan. Now, it is possible to qualify for a loan with a lower credit score. But you really need to know that once you go below a 720 credit score, you get charged a ridiculous amount of interest. Now, having a higher interest rate means that you're going to be paying more for that real estate over time. And this also means that your monthly payments are going to be much higher. Now, in my personal experience of doing real estate, I've seen banks go as low as a 600 credit score. Now, the best advice that I can give you before buying real estate is that you should have the best credit score that you possibly can. It will definitely be worth it in the end. Now, the second thing that a lender is going to be asking for is 2 years of tax returns. Now, depending on who the lender is, they may or they may not ask for 2 years of tax returns. But I can assure you that if you own your own business, this will be one of the requirements that you must come up with. The reason that lenders ask for these tax returns is so that they can see consistency within your income. They want to make sure that you just didn't have a good year this year and a terrible year last year, and vice versa. Pro tip: if you know you're going to be buying real estate, keep your tax deductions down to a minimum. Lenders will be looking at your net income after all of your deductions. For example, if you make $100,000 a year and you have $50,000 worth of deductions on your tax return, the lender is going to loan you money based off of the $50,000 a year, not the 100. Having a lot of deductions will result in you qualifying for less money than the higher amount of money that you would have qualified for if you didn't have so many deductions. Now, the next thing that a lender is going to be looking for is bank statements. Now, this is so that they can track every single dollar that goes into your account and every single dollar that will go out of your account. Ultimately, they want to make sure that there's not large amounts of cash being deposited and also that there's not large amounts of cash being withdrawn from the account. Having these could be suspicious to a lender. This could signal to a lender that you are irresponsible or that you may have an addiction. Now, on the other hand, making large cash deposits could signal to a lender that someone is padding your account to make it seem that you're making more money than you actually are. To the lender, this could mean that somebody is just feeding you cash to make sure that you qualify for the loan, and then once the real estate deal is finally over and closed, then you would just go ahead and take all of that money and give it back to the original person. Now, in real estate, we see this a lot with students and first-time home buyers, where maybe a parent or another relative will put money into their account to make it seem that they make more money than they actually do. Ultimately, the lender just wants full transparency. They want to source exactly what you make and also what you spend. They want to see consistency and they want to see stability. Now another requirement that a lender will want to see is what's called a cash reserve. Now a cash reserve is basically money that you have saved up other than your down payment. Now a bank will typically want to see a cash reserve in your bank account, and this is to ensure that once you buy the piece of real estate that you're not completely tapped out of money. They want to make sure that once you pay the first month's mortgage, you're also going to be able to pay the second, the third, and the fourth, and so on and so forth. Now a good rule of thumb is that you have 2 to 3 months of cash reserves available to you so that you can pay your expenses over the next 2 to 3 months. And this should be an account that you can continually funnel money into consistently. Now as far as proof of cash funds, lenders usually accept retirement accounts and investment accounts. Also, having a cash reserve is just good financial advice. This will ensure that you're not running yourself too thin, and that if you were to ever lose your job, you would at least have 2 to 3 months of expenses paid for. Now the next thing a lender is going to look for is job stability. Now every lender is different when it comes to these requirements, but some lenders may ask for 2 years of job history and other lenders may only ask for 1 year of job history. It really depends on who the lender is. And this is to ensure that you're not a job hopper and that you can hold a job down for more than just a couple of months. This really just goes back to consistency and stability. The more stable and consistent you are as a buyer, the more likely a bank will be willing to lend you money. The last thing that a bank will be looking at is your debt to income ratio. Basically, all a debt to income ratio is the amount of money that you make every month compared to how much debts that you're paying out to other people every single month. An example of these debts would be car loans, credit card payments, and even personal loans. Now ultimately, you want your debts to be as low as possible. The higher your debts are compared to your income, the less money that a bank will likely loan you. And lenders do have requirements when it comes to debt to income ratio. Now the highest debt to income ratio that you can have and a lender will still be willing to lend you money is a 46%. Preferably, a lender will want to see a 36% or lower debt to income ratio. Remember that the lower that your debt to income ratio is, the more money that a bank will loan you. Remember guys that a bank lends money based off of risk level. In the end, all they want to make sure is that you are qualified and that you are not going to default on the loan. Like I said before earlier in the video, it all comes back to 2 things: stability and consistency. I hope you enjoyed the video guys. If you guys enjoyed the information and you found it beneficial, go ahead and do me a favor and drop a like on this video. Also, if you guys are not already, go ahead and subscribe, click that bell notification so that you guys get notified every single time that I post content on here. And also, if you guys have any real estate or financial topics that you would like to have me cover on this channel, go ahead and leave it down in the comment section. And guys, like always, I hope everybody has a fantastic day today.